So, hi everyone. I'm here with Mark Kelly today, who's the Chief Commercial Officer for Key IVR, and Key IVR are a digital payment services company with a focus on compliance. So Mark, thanks very much and for joining me today.
Good afternoon, Chris. Thanks for inviting us.
So first off, it'd be good just to talk a little bit about, what have you seen over the last sort of 18 months or so, particularly as digital's become a bit of a theme, and obviously digital payments have become a theme as well. What would you say the themes are?
Yeah, I mean, we've obviously the digital transformation is a thing for from local government to it's in business first, but it's a directive now in most local governments to digitize all of the payment journeys. Excuse me. We were very lucky that we were purely in that space. We build SaaS deliverable software as a service deliverables and bespoke applications, but we were focused specifically on customers not present, so people who are having to do over the phone payments and trying to digitize that. We've been in that market for more than 10 years, I suppose. But then just shy to COVID, we did a big push into the US, into other areas we've been working in, and then COVID hit, and we just blew up, to be quite honest. So obviously, our main focus was the ability to work anywhere and securely capture payments without putting your client or your business or the agent at risk of exposure to any sensitive data. So it was quite fortuitous. Some people may have thought we started the disease to get our sales up, but yeah, so we fit that market particularly well.
And how much of a gap do you think there was before all this started in terms of that digitalization of payments, or the like remote payments, at least anyway? I mean, was there a bigger gap than we perceived?
Yeah, I mean, it's quite strange because if you look at the industry stats, they talk about mobile payments when they would use, instead of digital, they call them mobile payments. But the whole mobile digital transition went from about 30% in 2018, 40% 2019, and it's just kept going. And then during COVID, it's gone over 65% of payments have digitized. When you think that there are still 35% that aren't, there is a lot of people who are still struggling to get paid. We still have clients who come to us who are taking checks and having to open their branches to take cash payments and things like that. So there's a huge area that's still not even entertained the idea of digitization.
Yeah. And what sectors is that in? Is that really where you've got like face-to-face kind of, they're reliant on that first, or are there other themes that sort of come from that?
Well, for us, I mean, all of our verticals are it's such a mixed set. From traditionally, we were dealing with parking fines, permits for councils, loans companies, IVAs, charitables, all of the areas where the people were all remote. So that was very much the growth. But then we also look after manufacturers and retailers. So manufacturers who sell to the home. So manufacturers selling direct, whether that be furniture, windows, upholstery, cleaning, dry, doesn't matter what it is. If you make something and you wish to be paid for it before it gets there and then get paid when it's been installed, this was very difficult for people to deal with. You had the whole, I need to have the cash or bank transfer. I mean, one of our clients was taking £11 million in cash a week using their agents at home, delivering windows and completing the installation and taking cash, £11 million in cash a week. Just the banking charges were enough to pay for our solution, because you can imagine. And they were struggling because they had to, the staff had to pay into their own banks and transfer. It's just very, very antiquated. You tend to find anything that's FCA regulated has leapt into digitization in a lot firmer approach, purely because they don't want to be fined for lack of compliancy. Anybody who is looking to be PCI compliant and properly accredited, not just have a certificate, but actually be compliant to the process, they have to walk down the digital path, because it's very difficult to attain a decent level of safety if you're not digital. But there are still a lot of, we had a couple of larger buy-to-let companies. So like your model of go and buy my TV and pay for it over 5 years, those sorts of businesses, they were traditionally, before COVID, it was all paper books. People are paying in books. They were still going into the store, and they were, when they looked at digitization, it's like, all this money, we've got all this equipment to pay for. And we did a study with them. Their average salesperson on a Saturday afternoon, for instance, would be interrupted 6 times to take a payment whilst trying to sell a TV. So that cost alone in that person who can't buy, or the physical difficulty in having to have 6 people working in a store instead of 4 because they've got payments to take. So
I suppose it's all a bit of a theme of almost like taking the more transactional routine type process and digitizing that to let the guys in the store actually focus on what they do to a certain extent.
Yeah, and as weird as it is, the stores aren't open 24 hours a day.
Yeah.
You know, these stores are 6 days a week, but it comes to 6 o'clock and they close. And then people have to queue up on the next morning to make their payments. And if they don't pay on time, they would be fined because these people all have penalties in place for late payments to make people come in and pay. Switching them over to the flexibility and not just, it was better for the client. So the client's journey was literally journey to the shop, was literally wait, literally pay. And now the journey is they phone through one of our digital channels or they go on through a digital web channel. And once they've been in that channel, it knows who they are. So the journey, their first journey into digital is perhaps 6 minutes, 7 minutes. But from that moment on, whichever digital path they pick through technology, it identifies them with a phone number, a secondary identifier. We already have their card details stored with the bank. Clearly, we don't store card details. So a typical transaction for that customer went from 7 minutes to 27 seconds.
I mean, what are some of the security trends and some of the things to really think about, when you're actually processing digital, because it does open it up potentially to fraud, and so there's some risk there. I suppose you've got to take some precautions.
Yeah, I mean, there are several malware hackers out there with mageware. We've seen some enormous thefts of card data from some very, very big players, and you tend to find that's because they build their own websites and then they embed payments within their own website, which is the number one mistake that is made. The reality is, though, that 94% of card fraud is not digital theft. It's human. It's hearing the card details and writing them down. 94% globally. Nobody wants to steal data that's not worth anything. So no PCI data, no PII data, and you're no longer a target because there's nothing for them. Any business that's tried to go fully digital has lost clients because there's about 12 to 15% of the nation just don't care what you want to do with your business. I'm going to pay my fine. I'm going to complain first. I'm going to pay my debt. I'm going to complain first. I'm going to buy my £10,000 ring. I'm going to speak to you and make sure you're real. It's that kind of scenario. So hence they're still card holder not present, Moto transactions, deemed very risky. Buying a £10,000 diamond ring over the phone, it's a bit dangerous. But hybrids work. You have a floor except you don't make everybody go complex, but if it's something specific or something that's risk, just at that time.
So you talked about omnichannel there, I suppose, and agent-driven conversations versus purely digital. I mean, where do you think that's going to evolve to? I mean, because there's been a swing towards digital. There's definitely conversations out there around trying to create 100% digital journeys. As you just said, some of them you have to have, someone on the phone as well. I mean, how do you think that's going to evolve?
Well, one thing I know for certain, taking payments over the phone is going nowhere. That's the reality. Digitization, we don't believe will go above 80%, 80, maybe 85%, but it can't go further because the people using it don't want it. And until there's a reason for it, till there's a benefit for it that outweighs their chosen channel of communication, you're going to be in trouble. I mean,
what do you think the driver of that is? So do you think is it age? Is it, I suppose, technical ability? Is it just, is it, extrovert versus introvert? I mean, what do you think sort of drives the need to have that human interaction versus, being able to do things sort of, on your computer, on the phone?
It's a good question because it's our key objection, when we're doing digital payments or when we're doing payments over the phone, it's still technically digital as far as the customer's concerned because they're keying in data into their device. We're picking that data up and carrying it to the bank. We're not letting it go to the agent. So it is technically still digital, but it's not an age thing. It's a fear thing. There's definitely a fear thing, but most of the people we see still wanting to pay over the phone, it's just a personal choice. I don't care whether you're 18 or 80. it's how you want to interact with your supplier. And there are things that I pay for and I'm happy to pay for completely digitally, and I don't want any interaction. But there's then other things where I just want to ask something.
Yeah.
I want to be sure before I do that. Do I want to buy that £50,000 motorhome without having a conversation?
Yeah.
No, not
Yeah.
really. I want to feel like you're a business. I want to feel like I'm trading with a person. So I don't know if that's age, it's personality, I think. Debt is huge digital because there's an element, even the people who would perhaps like to speak to somebody, they don't want to speak to somebody who's just come into this job today on minimum wage, knows nothing about life, and I'm going to feel judged that my £30,000 credit card debt that you're now looking at, and it's a very personal thing. So when we talk to clients in that situation, it's a different reason. They want the anonymity. I don't want to say, yes, I've got no money. No, I can't afford to pay you. Yes, I got myself in debt. Why would I want that conversation? So in that scenario, and in Fine's scenario, it's a very small percentage of the people who want to talk. You do tend to find that in those areas, it's only the people who want to complain about paying, who want to phone to pay. They want if I'm going to give you my £70 for this parking fee, I'm going to give you the peace of my mind because I think you're a horrendous business. And that's what, when we speak to our clients, this is what people are saying to them, and they're coming on and just venting and then paying. So PCI compliance was originally set up by the big four. So Amex, Visa, MasterCard, JCB set up the payment services directives and the PCI compliance. So they police themselves. So the reality is there's somebody in one room saying, no, stop taking these £10 million of transactions because you're not compliant. And in the other room, they go, oh my God, they're stopping taking those £10 million of transactions. Where are we going to get our £10 million from? So we see this a lot where there is some flexibility, which is why, although we're PCI compliant and our products are, when we work with a client, it's not about PCI compliance. It's about safety and risk. Because you can be compliant and still do it wrong. Because getting a certificate is really easy. Answering questions that are almost leading questions, it's easy to get a certificate. If I was cynical, I would suggest that they would like you to be able to get a certificate. One of the questions is, do you store card data? And if you answer no, it removes 200 questions from the questionnaire. Yet the interpretation document states that you can't store card data or hear card data. Yet the question on the certificate application is, do you store card data? It doesn't ask if you hear it. Yet there's a whole section specifically aimed at contact center payments that specifically stipulates that you are responsible for the audio and the DTMF on the handset, on the telephone line, on the cable, on the network that you plug into, the physical socket, your computer, your telephone lines, your network lines, your environment itself, and all of your third parties connecting to that solution have access to the audio card data, and it's your responsibility to prevent them getting it.
And you mentioned earlier around like software as a service, and you guys are a software as a service provider. I mean, how much do you think that has changed in the industry in terms of like centralizing expertise? I mean, it feels like there's so many of these things are sort of like developing, but it's also like almost like a self-reinforcing, because as you specialize, you get more expert on it, and then you can give that more back to clients, I suppose.
Yeah, I mean, we see it. There's a lot in the sort of telephony, digitalization of telephony is probably the biggest change in the last 10 years. All of your original PSTN solutions changing to cloud-based and open code source, and every CRM provider now offers telephony embedded in their solution. Every payments provider offers telephony embedded in the solution, and that digital switch created a massive battle in the market. So the bigger players, your Avayas and those sorts of companies, have had to rethink their approach, and everything has had to become digital from their perspective as well. Their traditional phone on-premise stuff's gone, their traditional handsets are gone, and everything's web-based. So every business is switching that way.
Do you think it's going to fragment the business though, in terms of like, so you had these large companies before that sort of did everything, and now you've sort of got like specialist companies that are probably a little bit narrower that then have to be knitted together. Do you think that's a pro or a con?
I think it's both. I think we find customers there are customers who want to buy from a single provider for everything, and I think that's risky, because a jack of all trades and master of none is never really a good thing. You know, we specialize in what we do. We work with some very good industry partners in telephony, in physical payment services themselves, CRM and infrastructure providers, because that's their specialty. And we don't have we don't buy other people's products and sell them. We only make our own products. If we don't make it, we'll be working with the person that does make it and is really good at it. And yes, we can contract together if needs be, or you can contract directly, because normally we find the reason people don't want multiples is they want one phone number. You know, something didn't work, help me. And that's probably the biggest driver away from multiple platforms and multiple solution providers into a single entity. Isn't for the system, isn't even for billing, it's for help. Why is it not working? Because we're now heavily into digitization, therefore everything breaks. So you've got to know what you're doing, because that's technology.
So what do you think the solution to that is then? So that's almost like having a primary relationship manager or a primary business that sort of, you know, that sits at the head of it, and then works with partners. So it's that partnership approach, but within the business sort of environment, rather than having multiple suppliers.
Yeah, I think so. I think, you know, we've got a number of clients where we were the primary supplier, and we've helped them bring in secondary suppliers. So we retain client ownership, and this is the arrangement with the third parties. It's better for them. They don't want a new relationship. They just want to supply a service, and we understand how that service works, so we can help.
Going back to the customer side of things, I'm quite interested. Like, are there differences in terms of, like, you know, mobile payments, digital payments, how they sort of get implemented in different markets, and what are some of the themes, and sort of, you know, who's ahead versus not, or, you know, what are the different flavors that sort of work well in different kind of markets, really? So
the UK is probably one of our positives, negatives. One of the things we do in the UK is we like a good rule. And we're really good at following rules. You know, that's practically what we do. However, the US, for instance, purposely goes against the rule. So whereas in this country, I think there's about 40% of the businesses aren't PCI compliant. 85% of the businesses in the US aren't PCI compliant and refuse to be. It was created, PCI compliance was instigated and created in the US, in a country where up until 18 months ago, they still didn't use chip and pin because they felt it was an infringement of their rights. They're not PCI compliant. They're not digital. You know, we're currently doing a massive piece of work with the what would be the building society, but the credit unions over there. Credit unions for mortgages, they're non-digital. They walked into COVID with every single credit union taking payment by check or over the counter in cash. And then they shut 10,000 companies who couldn't open their offices and had no means to collect payment because they were not digital at all. They didn't even have card transactions. It's crazy. They are so far behind in what we would see as digital transformation. You do get into really niche areas where they've perhaps been an international business, or there's been an international sales drive that makes them change, and they can be different. So we kind of skip levels, you know, where we've gone through change this type of digital, we've gone to this, they've gone from paper to the newest. So all of a sudden they're doing, you know, Apple Pay, Amazon Pay, all those sorts of things, but yet you didn't have chip and pin. It skipped a whole generation, or 2 generations. So they don't like to adopt the new technology. They keep their technology longer. So here our server systems are 3 years or 5 years. It's 10 years to 15 years in the US. So when they invest in capital equipment, they expect to keep it a lot longer. For instance, for us to be PCI compliant, we've just thrown away £250,000 worth of hardware because to be PCI compliant, the hardware mustn't be older than 5 years. It doesn't matter whether it's compliant or not. That's the rule. So we've literally just disposed, and we have to, because of what goes through them, we have to destroy them. We can't even use them. They literally get wiped out. And Then we go to a country where they're keeping their technology for 15 years and aren't PCI compliant. And it's very frustrating for us in the market. You know, when you're trying to compete with it, we're competing against suppliers who don't follow the rules. And therefore, like a good English person says there's a rule, we'll follow the rule to my detriment.
What about end users? So it's customers, end user customers, so customers of your clients. Do they have, are you seeing different usage of the technology or different like mix and use of the technology by market? So for example, in France might be different than Germany, different than the UK. I mean, is that adoption change? And then is it tending towards like a commonality, or is it still quite divergent?
It's becoming more common, and COVID is the cause of it. COVID is for all of its negatives, has unified the world to an extent. You know, we're doing things differently. Digitization has probably had more of a push and growth because of COVID than any financial benefit was previous to it. Digitization was cool. We're going to save some time. We're going to advertise. It's really slick. The customer journey is great. We've got this Omnichannel piece. It's fairly adoptive. But if it costs you money as a business to add that in on top of what you were already doing and reduce your revenue, well, why should I do it? Unless it's going to make me more or bring me more, why would I do it? All of a sudden, I couldn't get the money, and COVID caused that. So there's been an absolute sprint to go as digital as physically possible, as fast as possible. We're seeing that now, as you would expect. 18 months later, we're seeing this in the council now. So we do quite a lot of work with councils for fines and permits and things like that. But they're very poor in a lot of their areas with digital payments, with any kind of digital anything. They still have a good bit of paper. But there is one of my team looks after local government, and we've seen over the last 4 months a huge push, massive push in digitization. People who were never willing to talk about what internal services they do that are manual are now screaming and chasing because they've been given this directive from government to go full transformation. They want everything digital. They don't want any paper anymore. They're being battered. They're pushing for eco and green and be efficient, and they're not green, they're not efficient, and they're not eco. So it really, you know, it's kind of like buying a Tesla and then flying around in a Learjet. It's not cool. You can't, so for us, it's going to be, I think it'll take about 3 years. Government change and council change with the way they work for tendering and the RF, you know, the RFs and stuff are crazy. But we've seen probably a 20% increase in inquiries from that. So it's an interesting time. We're always looking for new solutions and new services that we can bolt in to try and help. There are new services, certainly from one of the newest one from America, tokenization of data. You know, there's a lot of tokenization warehouses now over there because they don't trust their internet infrastructure. When we sell a solution in America, the first thing they say is, can we use your storage in the UK? Because there's no belief that anything that goes online in the US is safe. So there's a few large companies have started now where they're plugging in tokenization. So all of your client data, all of your client records, as you're taking it in real time, it goes to them first. They tokenize it and keep it. So they're trying to find ways to be fully digital.
Why is that done? Is that just because of data privacy legislation?
It's a very strange, I mean, because obviously with GDPR, they've adopted the GDPR policy with the California law. There are other states that have different regulations. The US is a different player, obviously, with all of the states they have. You've got those states who are fighting digitization and change hammer and tongue. They don't come here. We'd rather have these empty buildings and no money and no jobs. Don't come here. And then you've got the states where they're shooting forward. And they're way ahead of even here in some cases. It's quite strange. It depends on the state, who their governor is, what their driver is, what the message is for that. Are they an eco state? Are they a solid fuel state? So that's been the hardest thing for us to learn. We have now got 51 countries to deal with. The US is not one country. it's incredibly different from West Coast to East Coast. You know, we go West Coast and it's jeans and t-shirt. You go East Coast and it's a suit. You go Midtown. You know, you go to Dallas and it's no one's in the office. It's everybody's home working.
Yeah.
So they're certainly technology companies, telephony, infrastructure, solutions, payment services companies. All of those businesses have gone full digital, full remote. Offices are empty. You know, there's just one of our payment services provider. I was speaking to somebody in their office the other day and was on camera. There must have been 300 seats empty with 3 people in the office. I said, well, why did you come in? He said, well, I live around the corner. Everybody else doesn't. There's nobody been in the building for 2 years. So they've got no choice but to be digital.
You certainly see that as a trend, right? So, and I was just chatting here. I wonder how much increasing heating costs at home, especially over the winter, is going to drive people back to the offices. It'll be kind of.
It's possible. I mean, we because of our sector, we've obviously not had to. We did let people go home when it was the initial lockdown, but as a first line services provider for finance, and we have to be in the building. We've got live teams maintaining services that are system critical to central government, Ministry of Defence. You can't not be here. But that first 8-week period where we all went insane, I was locked in my, sleeping in the bedroom, working in the bedroom, and I never wanted an office at home. I like to go out. I like to go to work and come back and have the drive and clear my brain and come into real life. And all of a sudden we fell into that 8 weeks of perpetual digital connection. Then we asked everybody to come back. It was just, look, we got to, mental health was increasing. It was horrendous, so we were very lucky that our systems for ourselves allow us to be wherever we want to be.
Just finally, I suppose, where do you think we go from here? I mean, so we talked a bit about digitalization in payments, things linked together, I suppose, different vendors sort of being linked together, and being able to put services in for customers. And it sounds like there's a big push towards mobile payments, digital payments. But what do you think the next steps are going to be? I mean, what happens from here on out for the next 5 years?
So it will continue. You'll find a lot more. There'll be a lot of new providers. The open source technology that is now around, the frameworks that have been built underneath what we do, is meaning so many new providers can start doing more and more of their own. So I think it will just continue to grow. We certainly, from a PCI compliance, there is plenty of people who aren't. From a digital usage and process, there are plenty of people that don't. So there's still a lot to move across. It is very driven by the vertical, clearly, but everybody's touched with it now with the COVID piece. So I can't see it stopping. We don't talk to anybody about, we're all going to be back in the office. It's all hybrid, providing more technology, more protection, more security, and more flexibility to do that. And be connected to your systems. I think that's the change. There are a lot of companies we speak to who digitized first that are going to do it again. So you look at insurance, for instance, they were probably one of the first to digitize what they were doing. And that was mainly because most insurance broker/stroke companies are working with multiple providers behind. So just like the travel industry, they digitized first. Those two entities would have a computer system with 5 different programs. You'll hear you still do it now. I just need to switch the application. It's pretty detailed. I just need to switch the application. So I think that's where we're going to see the next change, is them realizing that 5 applications for that user is not very good. Somebody, we've created repository hubs and centralized interface hubs. So you've got all your legacy stuff. Let's just give you one front end. One thing for your staff to deal with, one thing for the customer to see, single branded format, single usage. And all the legacy stuff just handled out of the way. That for me is what I think people will push to, is simplification of their digital approach.
So Mark, thank you very much for chatting with me today. I really appreciate it. Some fascinating, interesting topics as we sort of delve into the whole payment piece. So I really appreciate it.